What's up, gals and guys? Welcome back to another video. Today we will be trading AMD. Okay, I will show you its consolidation breakout. You don't see it, but it's right here. Okay, it's a very short consolidation, but I'll show you more. All right, so just in case, I'm not a professional. This is disclaimer. So whatever I say and do, this is what I think it is. So I don't recommend you to copy exactly what I do. Okay, so whatever I say, take it with a grain of salt. I don't know what I'm doing. All right, guys. So as usual, you wanna, before the trade the stock, you wanna look at the daily chart. Okay, so this is a daily chart of AMD. It's been trending up, and this is today. Okay, so basically the stock gap up. I'm so sorry. The stock gap up. Okay, but you don't see that much right here, right? And then move up and down. So that's a whole day. So we want to go into a 30-minute chart. Okay, anything in gray is pre-market and after hour. Okay, this is yesterday and this is today. Okay, so this is the pre-market. Look at it. It gap up above yesterday high. Okay, and it stay up there until open. Okay, and this is where we're gonna get into the trade. But as you can see, the stock maintain is uptrend, this range, okay, above yesterday high. So that's very important to know. Okay, so that's something I want you to see in the bigger picture. Okay, and this is the trade. Okay, so I use the 1 minute and the 3 minute chart. Okay, 1 minute give me a closer look into the chart, and then the 3 minute give me a bigger view of the whole trend of the stock. Okay, so let's put something into this. Okay, all right, so basically before you trade any stock, you want to have some kind of catalyst or some kind of fundamental news that will drive the stock. So as usual, you want to have some kind of news, and then that give the direction of the stock, and then the technical is when you're trying to come in and you try to make the trade and you use technical for it. So at this point, AMD was up because TSM, Taiwan Semiconductor, they did well on their earning, and they chip manufacturers, so it's kind of indirectly affected AMD, Intel, and NVDA. Okay, so this is a sympathy play. Okay, as you can see, and it did gap up pretty decent pre-market, like more than I believe 2% pre-market. So it's pretty good, and it stay in that range for like 2 hours. 1, 2, 3, 4, 5. So 2.5 hours. It stay in this range. Okay, and at open, it's kind of like went down a little bit, and then it's pop up and is create a new high. So this is very important. The new high at open, saying that there are people who are willing to buy, or maybe the short, got squeezed out at the open. Okay, so that's something to think about. And as usual, you want to compare this to the S&P. Okay, is that S&P? Look at this. It was up and then it went down at the open, and really it went negative. While the AMD, it never went negative. So the relative strength for this stock is actually really high. Okay, so compared to the S&P, so it's strong, and then it's also have a catalyst for the move. Okay, so those are the two things you want to look at right off the bat. And you just have to wait for the formation to come in. Some people could trade at the open right here. This is a falling, kind of like a falling wedge to me, what I say, but I don't like to trade that. Depend, but like this, the formation I see, I was waiting to see what's going on, and as it make a new high, we're like, okay, that's a good thing for me to go on afterward. So I'm waiting for retracement, okay, to play for it. And so this is, to me, as the better formation for me to play. Okay, so basically it move up, make a new high, and then it consolidate and move down with the market, as you could see here. So the market went down negative, it moved also down, and people take profit, and this the short will probably come and short right here, or also short right here. So at this point, this creates this bear trap right here, which is is the bear trap. So this gonna eventually later on create the short squeeze up, So that's the thing. So once you have this right here, so when you see this, right, it's a lower low, but it's bounced back right away. It gives this long wick here. This is a very bullish candle formation here. I don't know what it's called, but it's very bullish. Okay, so that's reversal candle formation, and then it's retraced back a little bit, and it gives you a higher low. Okay, so which is very good because this usually serves as a stop loss. Okay, stop loss could be here or stop loss could be here, and then you enter above this high of the move. So it's right here should be where you enter the trade. Okay, all right. So and then as usual you want to look at the volume. I don't use any other indicator beside the volume, and as you can see here, right, so buying was good at open, and then selling, look at the selling again, and then selling again. The selling has been decreasing, all right, throughout, and especially this part is very important. You want to see very low selling, so the seller kind of out, and at this point once above this, I mean, I would prefer more volume to come in here, but it didn't. However, I'm going to show you later, the reason why it's good to still hold the stock even though there is not a lot of volume coming in. All right, and then as I could say, an entry above the VWAP. So I usually like to enter it above the VWAP. So this entry is above the VWAP. Okay, VWAP serves as a support. Okay, and then also it's above the 20-day moving average on the 3-minute chart. So 20-day moving average is usually the tug of war where you say, bull, bear, so that's the thing. So it's a very good spot, and that's fit in all the criteria that I have. Okay, the only thing I don't like about this trade is that this consolidation is a little bit short. It's like 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6 minutes, like 6 minutes. I would prefer maybe 15 minutes or more, but sometimes you don't have the luxury. And the thing about this, right, is good because there is a bear trap here, and I like that. So this part, the short time consolidation could be neglected in some way. Okay, and also so at this point, this is the entry 56.20. Okay, and then your stop loss should be around here, so that could cost you like 25 cents. Okay, so that's what I would do. Some people would do all the way down here, so 1 2 3 4 5 6, so 6, the rest around 60 cents. Okay, so think about it, right? And the target, if you enter here, your target should be the high. Okay, so that's 40 cents. 1 2 3 4, so you nearly get 1 to 2 return right off the bat. Okay, and then people who risk around 60 cents, you see they're not selling until they get the 60 cents. These people are very, very disciplined, and as you can see here, the price go up 1 2 3 4 5 6, 60 cents, and then they start to sell, and then this create nearly the same pattern here as you could see, and then it's move up, continue moving up. All right, so that is the whole trade itself here. But as usual, if you watch my video, I like to trade with the S&P. Okay, so as you can see here, the stock, when the S&P went down, base out at the bottom, and then start moving up. Okay, so I did a a combination of the chart. Look at this, right? This is where the S&P bottom, this is where the consolidation is, right? And as the S&P move up, this move up with it. So right here, the volume wasn't high, the entry volume wasn't high on the breakout of that consolidation period, but you shouldn't sell out of it because the S&P was moving back up. Okay, and as you could see, it moved up to here. This is where the top, right, of that range, and then it's consolidate. It moved exactly like the AMD. AMD moved exactly like the S&P, and then this part right here, continuation, is move all the way up. S&P move all the way up. So that's the thing. That's the beauty of trading with the S&P. So it's moved, as you could see here. It might move, it might be different, but it's nearly the same. And if you trade with the S&P, the chance of you making money out of it is much higher. And then with plus the criteria, I would say around maybe 70%, you know, your chances of making money. All right, so that's the thing. And you know, usually I would end it here, but I have a bonus for you. GGen, I do not know anything about this stock, but when I was scouting, looking through the list, I saw this. This I prefer more. Like I said, you know, I gotta have some kind of longer consolidation. This is the same time frame, the same stock, same day. I have two options. CGen is also a Sympathy play too. I think Gilead bought something that's similar to GGen and it went up. Sin, I don't know anything about GGen. I didn't want to trade it. And then at this point right here, it was up like 13%. So it was like Sympathy play up 13% already. I didn't feel like, you know, it has a chance. But look at this, you know, the criteria. Above entry is right here, you know, right here. Above the VWAP and the 20-day moving average, okay, you risk about 20 something cent also, and your target is right here. See that 1 to 2 return right away. Same exact, not exact formation, but very similar. When it's consolidated sideways, the more, I'm sorry, I'm keep bubbling here. The market went down, okay, and as the market pop up, it's moved back up. So that's, so just say, in the same day, same time frame, you have different option, you know, and to trade. So just so you know, that's something, you know, you have to look out for, and sometimes you have to make choices. Anyway, guys, basically that is all about a AMD trade. Okay, so that's it. So stay safe and happy trading. Hook me up with a like, whatever. I don't care. Bye.